Good morning, everyone. It is Julie here with your Thursday morning stock market news. We're getting you up to speed with what you need to know as the market opens. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Just one more day until the weekend. As usual, this morning we're going to take a look at exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. If you enjoyed today's video, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. Let's get right into this morning's exciting stock market news. Once again, we do have U.S. stock futures in the red. Right now, Dow futures are down 0.23%, S&P 500 futures down 0.19%, and NASDAQ futures also down 0.23%. Shares of AMC have dipped while their Ape Units are on the rise after a special master supported their conversion plan settlement. The special master, appointed to weigh in on the proposed settlement, has issued a general recommendation in favor of approving AMC Entertainment being able to convert their preferred units and raise equity. Special Master Karine Almato was appointed in Delaware's Court of Chancery to address a wide swath of objections to the proposed settlement. AMC plans to convert their Ape Units into common stock, implement a 1-for-10 reverse stock split, and issue shares to raise more funds. Analysts do currently rate the AMC stock a moderate sell with a downside of over 52%. Micron plans to invest up to $2.8 billion in a new chip plant in India. Micron said that the facility would be in Gujarat, and construction of the new DRAM and NAND plant is expected to start later this year, becoming operational in late 2024. They are slated to receive fiscal support for the total project cost from the Indian central government for 50%, with incentives from the state of Gujarat for 20% of the total project cost. Analysts currently rate the Micron stock a moderate buy with an average upside of 11%. Shares of NRG Energy are in the green this morning after they boosted their share buyback plan and pledged for greater investor returns. They increased their stock buyback program to $2.7 billion, up from $1 billion through 2025. They also pledged to save an additional $150 million in costs through new efficiency initiatives, and they outlined additional measures to deleverage their balance sheet. They also updated their capital allocation framework, and after deleveraging, they plan to return 80% of excess cash to shareholders and invest 20% in growth initiatives. This was compared to their previous 50-50% allocation. Analysts currently rate the NRG stock a moderate buy with an average upside of 19%. And Novo Nordisk is under pressure this morning after a safety signal linked to their weight loss drug class, which includes Ozempic. There are reports of a thyroid cancer safety signal linked to certain agonists that represent the company's popular weight loss agent, semaglutide, which is the active ingredient of some of their drugs like Ozempic. The EU drug regulator raised the safety signal to monitor potential adverse events further. The company is expected to provide supplementary information to the EMA before July 26th. Their stock currently just has one analyst rating coming in with a buy and an upside of 8%. Now moving over to notable earnings reports. In the pre-market this morning, we heard from Darden Restaurants. They are the parent company of popular restaurant chains like Red Lobster, Olive Garden, and Longhorn Steakhouse. Now, they did come out with both an earnings and revenue beat, but their stock is falling after their same restaurant sales fell short of expectations. Same restaurant sales rose 4% in their fourth quarter, just missing the consensus of 4.2%. Meanwhile, their Q4 earnings per share of $2.58 beat expectations by 4 cents per share, and revenue of $2.8 billion grew over 6% year-over-year, beating expectations by $30 million. Analysts currently rate the Darden Restaurant stock a strong buy with an average upside of 2%. Shares of Accenture are also in the red this morning, despite an earnings and revenue beat and raising the lower end of their earnings forecast. For their Q3, they reported earnings per share of $3.19, coming in 19 cents ahead of analyst expectations, and their revenue of $16.56 billion beat by $80 million. New bookings for the quarter were $17.2 billion, and the company is expecting revenue between $15.75 to $16.35 billion for the next quarter. Their stock is currently rated a moderate buy with an average upside of 7%. And actually in the green this morning, we have FactSet Research Systems. Their Q3 earnings per share of $3.79 beat expectations by 19 cents per share, and revenue of $529.8 million beat expectations by $1.74 million and grew over 8% year over year. Analysts currently rate their stock a hold with an average upside of 2.5%. Let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by AMC's Ape Units on news of the support at their conversion plan. Trading under the ticker APE or APE, the stock is up 11.2%. Oh, and they are battling for first place with Roivant Sciences under ROIV, also up about 11.2%, and KB Financial Group under KB up 6.5%. And our biggest losers this morning are led by a company called Telkom Indonesia. They seem to be falling after some recent sell-offs from DGS Capital Management. Trading under the ticker TLK, their stock is down about 12.7%. They're closely followed by TriPoint Homes under TPH, down 12.68%, and Spirit Aerosystems under SPR, down 9.3%. So that is going to be everything for Thursday morning's stock market news, getting you up to speed with what you need to know as the market opens. If you made it to the end, don't forget to hit that thumbs up button and say good morning in the comments. I always love hearing from you guys. Thanks so much for watching. Have a great day, and I'll see you back here next time.